Hi everyone, welcome back. So I wanted to do something new today. I want to share my knowledge and learnings on how to do digital scuttlebutt, what it takes to go beyond the basics of investing, right? So let's first start with the purpose of the presentation. If you think of the journey of an investor, we start out by learning and studying the financials, the metrics of companies like PE ratio, ROCE, and so forth, the P&L statement, cash flow statement, balance sheet, and so forth. After we have done a lot of this, the next step is to go into the subjective aspects of the company, things like conference calls, annual reports, investor presentations. What we are going to now discuss is stage 3, where you go beyond these individual items for a company. And this is important to be able to holistically, in a 360-degree way, triangulate the particular prospects of this company and figure out for the company in question whether what the company is guiding for or management is guiding for makes sense or don't make sense, right? So this is the reason for learning the art of digital scuttlebutt. And I'm going to explain this using 10 examples of ways in which the internet hides insights worth a lot of value and capital. So first, let's start with a disclaimer. This is an important disclaimer. This is the fact that I am not a SEBI registered advisor. Any kind of knowledge I share on how to do scuttlebutt is purely for the purposes of sharing the knowledge, because I'm not a SEBI registered advisor. None of the companies I will discuss are buy or sell recommendations. They are simply to illustrate the point of that particular digital scuttlebutt technique. And it is important for everyone to do their own due diligence, because at the end of the day, it's their own risk capital, their own pain, and their own gains. So let's start with the first technique, which is, imagine that you're studying a particular company, in this case Shivalik Biometals, right? The important thing is to understand who its key or large clients are, and then look for those companies online for their online presence and learn about them. Because if you think of how money or cash or capital flows, it flows from the end consumer to the tier 1 to the tier 2 and so on and so forth, right? In this case, let's say there is a BMW or a Tesla customer which buys the BMW or Tesla. They pay Tesla or BMW. Then BMW or Tesla would pay their tier 1 supplier, which in this case could be Vishay, who might have sold electronics, passive components like resistors to Tesla and BMW. And then that money is what Vishay would pay to Shivalik for manufacturing those shunt resistors, right? So that's how the cash flows. So you have to follow the cash, and every part of the value chain has to be understood well for you to be able to successfully predict the evolution of cash flows into the future. So in the case of Shivalik, if you go through the notes on Value Picker, you'll figure out that investors have been going to AGM and tracking Shivalik for a long time. And because of that, they know that Vishay is one of the large clients for Shivalik. And Vishay is, someone that we can actually learn about. So Vishay Intertechnology Investor Relations, right? That's what the slide deck said. Google for Vishay IR. Let's just, make it like this. So events and presentations, right? So now you have the presentation, you have the earning call, all of it is available, right? Let's do the following. Let's quickly go over the presentation once, and then I also want to show the con call transcript and show some specific things. Now, if you go over this, you will see a few interesting things which are important. For example, Shivalik's supplies of shunt resistors would go in the resistor segment, right? So we have to see the resistor segment and what's happening to it. You can see that the gross margins for Vishay have gone down significantly from 33 to 29%, and the revenues are flat. The book to bill ratio has gone down, which effectively means the amount of revenue they generated is low compared to the amount of bookings or like future revenue visibility they got in the quarter, right? So it could certainly indicate some amount of destocking and some amount of reduction in orders that customers are placing, customers like all the auto OEMs and industrial OEMs. So one more fascinating thing about this way of doing it is that you will even figure out the end consumer or the end OEM through this approach. For example, we went to Vishay, we went at the customer base, and now we have figured out that ZF, General Electric, Hyundai, Cisco, Samsung, all of these are clients for Vishay. LG, Tesla, Apple, right? So this is how we figure out where could potentially Shivalik's products be going, right? That's how we figure it out. Now we know that Shivalik makes shunt resistors for smart meters and for auto applications. So you can look for smart meter or auto companies here. That's how you'll figure out, okay, it's probably going in that direction. There's just one more thing I think that I want to show. Let's quickly go over it once, or maybe not. I think that was the important slide on the breakup by industry and also the breakup by segments, right? So look at the resistor segment, 29% gross, 33% gross. Margins have gone down. Now let's look at Shivalik. What you can see is that the margins are at 49.8% in this quarter. If you look at a quarter ago, it's roughly maybe 1.4% down, 1.3 something percent down. If you look at a year ago period, so June 23 say June 22, they are again down by a very small amount, like 50 basis points or something, right? So it really shows you that Shivalik does have some pricing power. you know Effectively, if you think of why Vishay's margins would be down in that particular segment, it means that Vishay's suppliers are able to increase their cost, but Vishay is unable to increase its cost, right? So it really shows you that Porter 5 forces in action, that interplay of gross margins of client and supplier. The last thing I want to do is maybe just look at the con call ones. Vishay Inter Technology Q2 con call, because in US the quarters are according to the calendar year. I think Seeking Alpha would have the transcript. What I really want to do here, because I've already read through the, okay, I think I can't read this on Seeking Alpha probably because I don't have the premium version. I hope I'm able to read it here. Yeah, anyway, even if I can't read it, I would just urge all of you to go back. I don't know if I can go to this quarter app if it's available online, but I mean on the desktop. But anyway, go back and read the con call for Vishay. When you do, what you'll see is that Vishay has guided for the industrial segment to have some destocking. So the industrial segment is where a lot of destocking is happening right now, and where the orders and the outlook is a bit weak. Also, EV segment in China is where the outlook is a bit weak. So I think all of these are insights we can gain by scuttlebutting the client digitally who is listed abroad. Let's go to the next one, which is Google Trends. So this is one of the, I think God's gift to humanity or Google's gift to humanity, which is Google Trends. It's one of the most like epic things you can find, to be honest. So here what we do is we search for the topic red tape. You have to look for the most canonical representation for that concept. For example, red tape, you could have entered red tape without a space also, right? But then you get no suggestions, which clearly means this is not a common term. This is not what people search for or how Google wants you to view it. You search for red tape with a space. This is the one which looks canonical because it's called a topic and it has the right logo. Let's go at this one, which is red tape. Now let's go to, rather than past day, let's go to last 12 months. So when you go to 12 months, you clearly see that there's a seasonality here with a peak in Q3 of Indian financial years, right? There's a peak in December, then there's a peak in the end of December, then it sort of tapers off a bit, right? So you see that there's some seasonality and like that much is clear. Now let's go to the last 5 years. This is where the power of the brand and what it has been able to achieve is very much visible in this graph, right? So look at where they started 5 years ago at like, so effectively what this means is these are organic searches done by end consumers for red tape over time, right? So if they are successful in building a brand, effectively this should be an upward sloping graph. The reason it has some spikes and all is because there is seasonality, of course. There are probably more searches in some point of time compared to others, but the general trend is very visible. Now you can see that the peak always happens around the same time, which is, let's say in this case, 22 to 28 December 2019, then 20 to 26 2020, then 19 to 25 December 2021, and finally we have a peak at, I mean, we are unable to go there because it's saturating, but you can see it's at the same time, which is the last week of December. You can clearly see that there is some seasonality. You can see that despite the seasonality, there is an upward sloping nature of the peaks, right? So what you can see is that there's a upward sloping nature of these peaks, right? That much is very clear. This essentially shows you the growth in the brand over time, right? And look at this, that in the 2019 period it was 50, and then in 2022 it was 100. This effectively shows that there is a CAGR of 25-26%. That is the trend line for red tape, right? You can look at the bottom as well, and it would probably have a similar kind of trend line. Of course, the 2020 bottom was really bad because of COVID. This was also a little bit bad because of COVID, and then this is probably coming more to the like normal periods of time, right? So 43 here and like 56 here. So bottom to bottom, like if you look at the first bottom, 43 to 56, 56 by 43, you still have a 30% growth, right? This effectively shows you that they are growing roughly 30% year on year, 25 to 30%. That's the kind of growth I would expect in the brand over a long period of time, right? So now we are able to sort of understand that what can be expected in the future, what can be the thesis that the investor has here, right? The thesis is for 25 to 30% growth. That is what ideally the brand should deliver, because that's how people are searching for it, and ideally those searches should convert to revenue if they are doing things well, and that is what the thesis is. I think Google Trends is one of the most important things to see. Now another thing to just add here as a thing is that you can even see where it is most popular and where people are searching. That seems to be primarily in Punjab, Haryana, Chandigarh, Jammu and Kashmir, Delhi. You can see that a lot of the brand interest is from North India. And it also shows you where the management is most likely concentrating, right? Because where people are trying to build a brand, where you have the offline stores, the brand building exercise, that is where there would be more searches. So you can see that Punjab is like the bluest, and then Uttar Pradesh is bluer than the rest of India. Rajasthan is bluer, but like Madhya Pradesh is not blue at all. So essentially they have only just made a North Indian brand right now. That also shows you the extent of TAM that they have. Look at the interest in Andhra Pradesh, Karnataka, Kerala, Tamil Nadu. They are not building a brand here right now. This is the TAM for them to grow in the future, right? So this 25-30% growth can probably continue for a decent amount of time, because they haven't built a brand in most of the more affluent places of India, like Gujarat is 9, Maharashtra is 13, Tamil Nadu is 6, Karnataka is 13. These are like much lower than the core geographies, where like Haryana, Punjab is like the core geography where it's like 100. I mean, these are all like relative comparisons. Rajasthan and Uttar Pradesh is where they are probably expanding more right now, which is at 30, and then the rest of it is like single digits, right? Okay. So I think we are done with the second one, which is like Google Trends for brands. Now the interesting thing to remember is this primarily only works for brands because that's what people would search for, right? So we can scuttlebutt red tape this way, but we really can't scuttlebutt Shivalik bimetals this way. Where like their customers are not searching through Google search for like shunt resistors. So the next one is extremely important and interesting, which is services companies EPFO data, right? This is again, like, I think we live in a really good place here in India where there are a lot of these high frequency indicators and leading indicators which are available to us. So there is this thing called EPFO establishment search. You can actually search for companies and the kind of EPF that they are paying. So let me also put the link here. Of course, at the end, I want to put the slides in the video also. Let's go to this link, right? Now let's search for Mastec L4923. Looks like there are lots of Mastecs, so I don't want to get the name wrong. Let's look at this. I think it's Mastec Limited. It's just Mastec Limited. So this is the one, Mastec Limited. You have to click on view details. Then you have all of this. You go to view payment details. And boom, you have data from ranging back to 2016. So what kind of hiring? How many employees did Mastec have in 2016? And what was the total amount of EPF that they paid? What was the day on which it was paid? Month wise, we have data going back to 2016 December. So effectively it means like from 2017, right? Now you can come to the last um I think a lot of this data seems to be a bit noisy. Let's go back a little bit, and I think, yeah, I think for some of the employees, the EPF for older wage months are being paid in August. That sort of, messing up the data a bit. So all of this data has to be processed by us, of course, as investors. But a tremendous amount of data is available here, right? So I think this is the important data point, that they had 1464 employees in June 23 plus 3 more. So that's 1467 employees in June 23, right? Um, I think for one person, they are separately paying some amount of EPF, and that can obviously mess up the data. But all of this you can clean up by downloading it, right? Because all you have to do is you have to add up by the wage month. You have to add the number of employees by wage month, and then you have all the data. Look at this, 1500 employees in May 23, right? This is the important thing. Now if you click on Excel, that will actually download all these data. Let's put it in desktop. Let's go to Google Sheets. Let's upload this. Payment details. Yep, replace sheet. You have all the data now. Now you can look at it that essentially now you're able to track the number of employees Mastec has over time. Of course, there would be a lot of this, like they're paying for like one employee for their 2017 wages they're paying in July 2023, right? So you'll have to add a lot of this data by the wage month, but after that you're able to see the number of employees over time that Mastec has. Let's do one more, maybe. Intellect Design Arena. Now, I do want to add one caveat, which is that this kind of EPF checking of employees has a couple of caveats attached to it. Number one caveat is this is most useful for services companies, not so much for manufacturing companies, because manufacturing companies could be doing automation, they could be making it more automated, firing employees, and this would really not tell you a lot. It would still give you some indications, but it would not tell you a lot, right? The other caveat is services employees also don't need to pay APF for all the employees. So it's just a proxy for you. You cannot think that this is the total number of employees, but the growth here would mostly account for like 80-90% of the trend that you want to capture. So now we are coming to, Intellect Design Arena. Look at this. So now finally, even for Intellect, you are able to see how many employees they have. Mostly they have 5640 employees in July, and 5511 employees in May. So June 5640, May 5511, right? Let's do a division and that will tell you its growth rate. So it's 2% month on month growth, right? This is month, June and May. Now if you do a power 12, that will tell you like the CAGR growth. So they're hiring at roughly 32% CAGR in the month of June, right? Of course, if you smooth this out over time, plot it over time, that's how you'll find the trend over time, right? So, okay, that I think mostly covers the EPF one as well. For Google Trend for red tape also, I want to just put this link here so that, you know, like people also know like what to, like how to go to these things. Vishay as well. Let's quickly put the Vishay IR link also here, that you know people know where to go. Yep. Okay. Now let's come to another very fascinating aspect, which is API companies, right? Now there are these pharmaceutical or medicines. Those have active pharmaceutical ingredient, which is the key or important chemical which shows or provides the efficacy of the medicine, right? That is why the medicine works the way it works. Now the thing is, for API companies, what you have to understand is that APIs are like a global commodity primarily. So because of it being a global commodity, you have to look at how is the competitive intensity for each of the molecules, right? If there are 5,000 molecules, it's like having 5,000 separate markets. And then for each of the market, you have to figure out who are the competitors. So let's do the following then. Let's search for US DMF filings. Right here you have the list, right? Now do bear in mind this is a 22 megabyte file. When you load it into Excel, it might give you some problems. But anyway, let's do that, right? This is the Excel file. I'll also put this link into the slide deck so that people can um, access it later. Again, go to Google Sheets, upload. Let's see if it works. Hopefully it should. Sometimes it doesn't work, but let's see. If it doesn't work, we'll just have to open Microsoft Excel. This is an absolutely massive file at 22 MB. I think it worked. Okay, it worked. Great. Now these are all the DMFs that have been filed throughout the years by different companies in USA, right? DMF is a drug master file. These are to be filed by API companies in United States. So any company that is claiming that I am selling or I will sell APIs in USA should have a DMF filing, and that's the digital scuttlebutt that you're doing. Let's look for Newland here. Now you can find 76 mentions of Newland. Effectively what it means is that they have filed 76 DMFs in USA. This either means that they're selling some of these APIs or they might sell some of these APIs in the future, right? You can see that this benzyl albuterol is there, albuterol sulfate is there, ranitidine is there, ranitidine hydrochloride, ciprofloxacin hydrochloride, sotalol hydrochloride, ipratropium bromide, ranitidine hydrochloride, ofloxacin USP, enalapril maleate, right? Go on, so on and so forth. I mean, you can keep going on and on about things that they have filed. Now, the interesting thing to remember and the way that this is useful, that you can look at this levetiracetam, right? Now, you can search for levetiracetam and figure out how many other companies have filed DMFs in US for levetiracetam. You can find that there are 28 DMFs for levetiracetam. This, and you can also see the companies who have filed those DMFs. For example, Aurobindo Pharma has filed a DMF for levetiracetam. Heikel has filed it, Lupin has filed it, Newland has filed it, Cigna has filed it, Mylan has filed it, Sun has filed it, Zhejiang Huawei Pharmaceutical have filed it, Jubilant Pharmova have filed it. All of this really tells you the competitive intensity. So any kind of molecule where there are smaller number of DMF filers effectively shows that there is less competitive intensity. And anywhere where there is a large number of DMF filers, that shows you that there are a large amount of competitive intensity there, because if 28 people are going to sell, you really can't have much differentiation. Many of these companies are larger than Newland. So I would say levetiracetam is mostly like a commoditized molecule at this point for Newland, right? In this way, you can figure out which of those are more niche molecules, which of those are like mass market and higher competitive intensity kind of molecules. So I think we can come back and go to the next one now. Let's also do the following, which is 2Q DMF list. Let's make this publicly accessible. And put it in the slide deck in case someone just wants to look at this and look for their favorite companies. Okay, next source of digital scuttlebutt, environment clearances, again for chemical and API companies, right? Maybe we should write chemical and API companies, environment clearances, right? Okay, Newland environment clearance. Now again the fascinating thing you have to understand is a lot of government procedures in India are essentially online or digital, and because of this you can see a lot of things happening in front of you. You know, what are the companies filing for, what do they want to make, how will they make it, what is the process, how much would be the affluent discharge, what is the amount of land area, what would be the investments, and importantly what are the set of future products that the company is claiming in its environment clearance it can make, right? All of those tell you the future direction of the company. This is especially important for the kind of companies that don't do con calls, right? Because there you can't even ask any questions. So a lot of people ask like, how do you figure out things? This is how you figure out things, especially for chemical companies. If you look at this for Newland, this is for the unit 1. I think this is the older one. This is the older filing that they have done. The issue is on 2017. Yeah, this is for the unit 1 and you can see all the things that they can make in unit 1. Levetiracetam, which we were just looking at, salbutamol sulfate, right? So all of these are available and you can even see how much they can make, right? I think this is the like actual amounts, which is 3 ton per month, 12 ton per month. Now finally, if you want, you can even go to the extent of finding out the prices of these to figure out what's the total amount of revenue that can come from these if they were to sell that in higher percentages or if the market conditions allow, right? So a lot of due diligence can be done this way. Maybe let's just do one more company which a lot of people have probably like at least heard about, which is Dynamic Products. So Dynamic Products makes artificial food colors. The thing you'll find out about Dynamic is that they don't do con calls. They do a AGM and sometimes AGM notes are available on Value Picker. They have started doing presentations now, but there is no con call, right? So Dynamic Products is another company and actually they didn't even have presentations till a while back. You can see that they mostly started in May 22, roughly a year ago. So what we could do is we could do environment clearance. Now this is going to give you a very significant amount of information about what they can make and you know how they would probably go about making it. You can see that they are doing a capex in Dahej. Proposed capacity is 74,000 meter cube meter square HA. I don't know what that means, but we can always convert and figure out what it means. A lot of the links here, this tor file, all of these would have a lot of meaty details of like what exactly are they going to say do. Look at this, right? This is the probably the summary which is right in front of you. Alpha naphthylamine 200 metric ton per month, phenyl alpha naphthylamine 50 metric ton per month. So you have already figured out a lot of products that Dynamic intends to make in their Dahej capex, right? And you didn't have to talk to the management or anything. You can even see the number of boilers and like what are the set of industrial equipment that they're planning to make. How much waste would be generated every day, right? How much water would be consumed every day? How much land did they acquire for all of this? What is the total capex that they have envisioned here? A tremendous amount of information is generally available in these environment clearance filings. Let's just put one such link here. Maybe rather than Newland, I'll just say Dynamic, because let's just use a different company as an example. I think the Newland one is also there, in which case I can put that one also. I think this is probably the Newland one. Yep, let's put this also. Yep, Dynamic and Newland filings. Okay. This is again a very fascinating aspect of like how you can look for data. Now the important thing to first figure out if you're tracking Angel One is that they get a lot of their revenues from F&O, right? Let's go to the segmental breakup kind of thing where they will tell like how much do they get from each of the segments, revenue breakup. Right. Now you can see that most of the revenue is coming from gross broking. If you look into what do they charge for, they mostly charge for F&O and intraday, right? F&O and intraday are the only two products where right now they are charging. So that really tells you that a lot of the revenue and profit would come from F&O. This interest income is of course by giving margin funding, that is also for F&O, right? So okay, now that we know that, all you have to do is look for NSE and basically go to this website where NSE gives their daily volumes of each of the segments, right? So let me put this also in the slide deck. This is an important one. Now the interesting thing is they have F&O volume going back to a decade. So you can see how F&O volumes have grown. For the entirety of FY10, 2010, the F&O volume was 34 crore, right? The F&O volume for FY23 was 4,000 crore, right? Yes, 4,000 crore. So from 34 crore to 4,000 crore is a 100x improvement or expansion in F&O volume in a matter of like a decade and a couple of years, like 12 years or something, right? 13 maybe. 100 times. Now you can see that for the entirety of FY23, which is the previous financial year, F&O volumes were 4,000 crores. Thousands, lakhs, crores, 4,000 crores, right? For FY24, which is the current financial year, and how many months have even gone by in the current financial year? April, May, June, July, and a bit of August, right? Half of August. Like 4.5 months have gone by. The F&O volume is already at 2,600 crore or so, right? If we simply take the existing run rate of F&O, 2,600 crore, multiplied by 12, divided by 4.5, that will tell you that for FY24, we can expect 7,000 crore of F&O index option contracts, and index options are effectively most of the F&O volumes, which is why I'm mostly looking at the index options. 7,000 would be roughly a doubling from last year, right? So F&O volume even today is doubling. So when someone says that there is a bear market in broking and like broking stocks are not doing well, I ask them where is the data to support it, right? The data is not there to support it really. The valuations can do whatever market, Mr. Market is moody, right? But our job as investors is to take advantage of that moody Mr. Market and not give in to it. So now going into the FY24, which is the current financial year data, you will see that for the month of April, it was 434 crores of volumes. 434, 565, 545. July is where this quote unquote breakout kind of thing happens, where it goes to 677 crore contracts traded, index options traded on NSE, right? August is already at 367 crores and not a lot of days have gone by in August, right? August 2023 calendar India, because I want to see the Indian holidays effectively. You can see how many days have gone by in August. 4 plus 5. 9 days have gone by. How many days are left? 4 plus 5 plus 4. So 14 days are left. 9 days have gone by. So you can even figure out how much would you expect August volumes to be. It would be 367 into 13 plus 9 divided by 9. 900 crore options traded. This is what we expect in August. If the current run rate is maintained, you're not expecting any growth on the current run rate in August, right? 900 crore would be a 33% jump month on month, right? Year on year, don't even ask me. So clearly F&O volumes have exploded. If F&O volumes have exploded, you should not be surprised when Angel reports a strong monthly disclosure of business updates, right? So this is the July business update. Now look at the expansion, right? How much have they increased? Number of orders have gone up 22% month on month, right? And average daily orders have also gone up 22% or 21.6% month on month. This should not be surprising from July to June. Let's look at the data for the overall index volumes. 677, 545. You have a very similar number of 24%, right? So clearly, there is a general industry-wide trend of expanding F&O volumes, and because of this, Angel is benefiting, and you really don't have to be a rocket scientist to see this. You just need to have the right set of data that you are monitoring. The next thing that I want to cover is online reviews. Now the thing that you have to understand is there was a time when the internet was not there. In that world, you would have to call up people, talk to them in the real world, right? It's a very time consuming and effort consuming kind of exercise. Now let's look at how this can be done in the digital day and age. Let's imagine a business like Wonderla, which owns a lot of theme parks and amusement parks, right? These are all the theme parks: Kochi, Hyderabad, Bengaluru. Now the thing is, you can actually go to Google Maps and figure out what people feel about Wonderla. Wonderla Amusement Park, 4.5 rating, 91,000 ratings, right? You can go to reviews, and now you can figure out exactly what people like and don't like about Wonderla, right? You can see that people like the water rides. They probably don't like the recoil. Nylon is probably mentioned because you need to bring nylon clothes. Disco is something that probably people like. Rain dance is something people like. Thrill rides is something people like. Laser show is something people like, right? You can even see the photos. So now imagine in a non-digital world, you would have to go to Bangalore and figure out what Wonderla Bangalore is like. No, not anymore, right? All you have to do is browse through these photos and you just figure out what's going on in Wonderla. And like, is it really good? Is it bad? looks okay, right? It doesn't look that bad, to be honest. So this is the primary thing I was talking about, that you can browse through these photos, figure out what people's responses are, and importantly even figure out the antithesis pointers, right? Because of course the management will talk about the great, but how do you figure out what could be going wrong, right? This is where you can look at and sort of look at the 1-star reviews only, right? I think sort by the lowest rating. Then you can look at the 1-star reviews and figure out what people didn't like. Super crowded even on a normal working Monday. The staff is super rude and ready to argue over small things. Wait times for ride is too much. It all filters down to buying a fast track ticket, which is twice the price. So, okay, I think I was expecting something negative, but he's saying positive things. What you have to understand is the fact that there is so much of um, bheed, and still people are having to buy the twice price ticket. They're still going, effectively shows that there is no alternative. They seem to have an almost monopoly like situation in Bangalore for this thing, right? I can say that from experience because some of my friends also went recently. Of course things like route management and route things should be fixed, but those can be minor irritants. You will find that everywhere. Let's look at the next one, which is Google Play Store reviews for Sasta Sundar. If we go to Sheets, let me search for Sasta Sundar. So I did this thing a while ago where I looked at all the different listed e-pharmacies. Now the interesting thing is you can go to Play Store and you can do a similar kind of scuttlebutt. For the real world user experiences, Google Maps. For the digital user experiences, Google Play Store, right? 4.5 rating, 1.3 lakh reviews, right? You can actually go to these reviews and read these reviews. So here you will figure out what are people upset about. Although service is decent, nonsense app, sometimes card gets cleared automatically. Clearly you can see what people don't like about this, right? So similar to that, I mean, basically what I had done is do a similar kind of like, what do people like, what do people not like, good product, brand. This is something I'd done a while back. This is like many months ago, but you can imagine doing something similar where you can like take a lot of these reviews and analyze them, look for trends, what are people happy with Pharmacy and unhappy with Sasta Sundar or vice versa, and thus you can figure out the probability that Sasta Sundar might win compared to Pharmacy, just as an example. Okay, let's go to the next one. Commodity prices. Then we have Social Blade, then we have Zoba. Okay. Commodity prices on Tijori and Screener. Now the interesting thing is a lot of the times companies have inputs, raw materials, which you need to understand how are they trending, right? Now on Screener, if you have the premium version, you can go to commodity prices and there you can check for any HS code or anything for like what are the import and export prices for those commodities. Um, what I want to try is let's look for the HS code for shunt resistors. And now let's like look at what's happening here. Now you can look at the exports and the imports, right? Perhaps this is not the best HS code for Shivalik because clearly the exports are showing like nothing, whereas we know that Shivalik exports. So let's try something else. Maybe let's try paracetamol, ibuprofen with or without paracetamol. Now you can see that exports have grown very fast for paracetamol over the last decade, right? And you can see the prices as well, that the prices had shot up to a very high number in April 2020, of course when COVID was happening. And from then it has of course come down and it's now even below the pre-COVID levels. It has gone to like some like 7-8 year old kind of prices is what it has gone down to, of course because of the excess capacity and the complete capital cycle playing out where a lot of capex happened, right? I think I can remove the export value. Yeah. Now you can see just the rate for like how the rate has been moving. So this is how you would do it on screener. Now let's go to Tijori. I don't think I have it open. So let's open Tijori. Let's look at, yeah, raw materials. Now you can see that on Tijori, there is a fair amount of data available on different kinds of chemicals for like how the prices have moved in the last, like 1 week, 1 month. You can see that for a lot of them, the prices are sort of stable. They have maybe even gone up right now compared to 1 month ago. But of course, in the like 1 year and 2 year time frame, they're down a lot, right? So this is another, I think, another tool that I find very useful, especially for chemicals, even for metals to some extent. This is a very useful tool to track, and they have like a 1 week, 1 month window, so you can track it on a very granular scale. The next one is Social Blade, Saregama tips subscriber tracking. So now one thing that you have to see, Saregama Music has 36.3 million subscribers. If you go to the about, you will find out that they have these many views. These are the total number of views, right? They're like 16.2 billion views total. We need to track the evolution of this number over time to then figure out what could be the trajectory of the revenue growth of the company, right? Because if you have more subscribers, you have more people who would repeatedly listen to your songs, and more views is directly like revenue that comes. So Revenue Blade is the tool to be used for this, where essentially for each of the social media handles, you can actually figure out the trend over time of like what's happening, right? So if you look at, let's go to see full monthly stats. Now what you can see is that their subscribers a month ago were 35.6 million and today are like 36.3 million, right? So 36.3 by 35.6, and if we compound it at that, you get like that the subscribers right now are growing at 26% CAGR. Now the interesting thing is the total views is also something that you can see, right? The revenue they get though is on the incremental views in that period of time. Now what you will have to do is to track this over a long period of time, so that quarter on quarter or year on year you can track how much revenue you would expect to get from YouTube. YouTube being a large percentage, it is a decent proxy in my opinion for revenue that we expected to get. You can see over time the general trend also for like weekly views. You can see that there has been some bump recently, probably because of the new movies that they have launched. Before that it was a very flattish kind of view count. Now it has gone up because of the bump, and now it's slowly coming back to normal, because these are like a one-time bump from these movies like Rocky Rani Ki Prem Kahani. So of course in a similar way you can do it for tips as well. Tips industries. You can obviously do it for T series as well, who is like the industry leader at this point. You can see of course that, let's go to the full monthly statistics. We can see that the views are pretty much flat over a period of time. Now let's finally go to T series. See monthly statistics. A silver subscription plan is required to view this graph. I guess they won't let me see this, but let's anyway put the link here. Commodity prices, the reason I'm not putting a link is, I mean, I'll happily put it, but you need the subscription to be able to view it. Online reviews, again, like I don't think this is really needed, but I'll still happily put it in case someone wants to reference it later on. Now let's come to the last one. I think we are down to the last one now, which is Zoba. There are so many such alternate information sources. One such source is Zoba. Zoba charges. So zobacorp.com/charges. Let's put this here. Now what you can see in Zoba is that, so essentially what happens is when a bank gives a loan, a charge gets created against the company to which the loan is given, right? So the charge holder is the bank, and then the borrower name is the company that has borrowed, right? Now this effectively lets you see all kinds of corporate loans given out by companies. Now if you wanted to scuttlebutt a company, let's say South India Bank, you would simply go down, and here in the charge holder name you would put South Indian Bank, and then you would probably only look for open charges, meaning closed charges are like loans you gave in the past but they are closed now, the loans are closed. So open charges, you would do search, and now you finally have, lo and behold, you have all the loans including some of the like very old loans. Now you can of course download all these loans. I didn't put a date limit here, so let's say charge created after August 1, just to see like what loans are they giving in August, right? Probably they have not given any loans in August that we are able to find. Let's try 2023. So I think we can find a lot of loans now which have been given in this period of time. In fact, looks like a lot of granular loans are also showing up here, like Akshay Control Systems Private Limited, AGX Retail Solutions. So it actually gives you a very granular way to figure out who the company has given loans to, and also to scuttlebutt those companies to figure out the credit risk that the bank is carrying in their balance sheet. So in this case, what I would then want to do is Krypton hardware products, right? I mean, this is not a large amount of loan. Let's look for a large loan. Like, this is one of the large loans because it's like 8 crore rupees almost. I'm sure there are like much larger loans also here which I can find. So I think this looks like probably the largest loan I could see right now. It's like 150 crore loans, right? Pretty large. Let's look for this Mahadhan Agritech. Now what you would need to do at this point is Mahadhan Agritech credit rating. So its parent company is Deepak Fertilizer, and then ICRA has given a rating. Now through this you can try to figure out, is this company rated well, is it rated poorly, and thus judge the quality of the loan given. If most of the loans have been given to AA, AAA rated kind of corporates, then the risk is lower compared to if the loans have been given to C, B, BB, BBB kind of rated corporates, right? So this is probably the last thing I wanted to share on like how we would scuttlebutt a corporate bank, and like how we can expect to like effectively scuttlebutt the loan book of corporate banks, right? I think that's about it. The end. And yep, hope everyone has a very happy Independence Day tomorrow, and yes, see you next time. Bye.